Hello. So Skeena Resources is a junior mining exploration company based out of Vancouver. We have exploration and development stage projects in the Golden Triangle of Northwest British Columbia. Just quickly take a look at our management and directors. Skeena as a company has been around for quite some time, but the entire management team and board is all new since about 2015. We've really focused on a young, keen team that's driven to really put past producing mines back into production to add value for our shareholders. So these are our three projects in the Golden Triangle. GJ is a copper gold porphyry project. We have a PEA on it. It's not our focus, and that's because SNP and especially Eskay Creek have quickly become our focus. So I'll dial right in on those. So SNP and Eskay are both past producing mines. They produced in the 90s and early 2000s, and the Golden Triangle in Northwest British Columbia was extremely remote in those days. So they were fly-in, fly-out operations, all diesel powered. And what's changed since then, and one of the reasons why we were so keen to get back into this area, has been the vast improvements in infrastructure. There's been about $2 billion spent on improving infrastructure in about the last decade. So you'll see Highway 37 in the Northwest Transmission Line goes up to Imperial Metals Red Crest Mine, but most importantly, there have been 3 hydroelectric facilities which has been built in between SNP and Eskay Creek within about the last 7 years. So areas that were once remote are no longer remote. And I have a video that'll come up here that'll show it in a bit more detail. So Eskay Creek is definitely our flagship project. We signed an option to acquire this from Barrick Gold in December of 2017. It's a very famous past producer. It was the highest grade gold mine in the world when it was in production, produced 3.3 million ounces at a staggering 45 grams per ton gold, another 160 million ounces of silver at over 70 ounces per ton. So very high grade deposit. This also meant that the cutoff grades were very high because it was very remote, and also the price of gold was substantially lower when these mines were in production. So for Eskay, the cutoff grade for the mill feed was 12 to 15 grams per ton, and the direct shipping ore was 30 grams per ton. So our thesis was simple: what material is left behind here that was not economic when the mines were in production that is now economic because of the vast improvements in infrastructure and the substantially higher gold price we have today? So I'm going to show you a video here. In a second. I'll just go through our new resource first. So excitingly, we announced a 4 million ounce resource just this past March. It's running 4.5 grams per ton, open pittable. So this mine was all underground when it was in production, but we've relooked at it and we think it makes a lot more sense to do it open pit now. So between the indicated and inferred, 4 million ounces at 4.5 grams per ton gold equivalent. And then let's hope the video starts here. It'll give an overview of the infrastructure I was talking about and also about the resource. So here we are in the Golden Triangle. This area's had a lot of exciting developments lately. I know GT Gold is here with us. They just announced a deal with Newmont, which was very exciting. Newcrest has come into this area. So it's an area that the majors are definitely starting to look at again. So we're going to zoom in on our Eskay Creek project here. You can see Highway 37 and the Northwest Transmission Line run all the way up to Imperial Metals Red Crest Mine, and then those 3 hydroelectric facilities. Volcano Creek hydroelectric facility is only about 7 kilometers down the road, and that's 4 cents a kilowatt hour power. So when this mine was in production, about 50% of the operating expense was diesel, and now the power would only account for about 10 to 15% of the OPEX, so substantially different. So we're going to zoom in here. This is a bit of drone footage from our drill program last summer. So you can see it's rolling meadows. We don't have any glaciers here that you have to deal with like at the nearby Brucejack mine with Pretium. We're going to zoom in on the drill here. So that's kind of the ridge where the deposit is right along there. And then we'll zoom into underground and look at where the resource is. So everything in gray is the underground development, or what's been historically mined out. In gold there, that's the underground portion of the resource, so about 300,000 ounces is underground, and the other 3.7 million is all open pittable. So the gold there, that's the underground, and then the open pit portion of the resource will pop up here in red. The strip ratio in the open pit's running about 7:1, but as I mentioned, the grade's at 4.5 grams per ton gold equivalent, so extremely high grade. And the underground portion of the resource is running closer to 10 grams per ton gold equivalent. And then over there, you'll see the 22 zone, which is another small pit. And then you'll see a cluster of mineralization below there, which is actually one of our main targets for exploration drilling, which we hope to do more of this summer. So there's the resource. Skeena's pretty excited about this. When we inherited this deposit from Barrick, when we optioned it, we got 700,000 meters of assay data. And for the first 8 months, we really just mined the data. So we put our first resource out in September before we had done any drilling whatsoever. Our first resource was 2 million ounces at 10 grams, but all underground. Then when we did about 7,000 meters of drilling last summer, we realized it made a lot more sense to look at this from an open pit perspective, which is what you can see, which is what you can see here. And I mentioned we'll be doing some infill drilling this summer, and that's because if you look at the tonnage between the indicated and inferred, there's just over 13 million tons, but you'll notice the grade is different. The indicated, it's 6.1 grams per ton gold equivalent, whereas on the inferred, it's only 2.9, and that's simply due to drill spacing. So on the indicated, it's where it was historically mined, so the drill spacing is about 10 to 15 meters, whereas in the inferred, it's the 21A and the 22 zone. Those are areas that were never mined because they were below the cutoff grade that existed when the mine was in operation, so the drill spacing is more like 50 to 70 meters. When you're working on a resource, the further away you move from a drill hole, the more the grade will drop due to uncertainty. But we're very confident we're going to be able to bring that 2.9 grams per ton closer to the 6 grams per ton just with infill drilling. And I'll show you why we're so confident. I'll show you just a quick cross-section through the 22 zone, which is off to the right there. So these are some of the spectacular results we put out last summer, 5.71 grams per ton over 92 meters. So it's very consistent, tabular in nature. It's a VMS-style deposit. So we're very confident that with infill drilling, we see a pathway to probably adding about another 1 million ounces. And then in addition to that, we have exploration drilling that we'd like to do. The 7,000 meters that we did was really to collect metallurgical samples and to do a bit of the infill, but it was all near surface. So what you can see here are all the blue dots are mineralization greater than 4 grams over 2 meters. So you can see that cluster that I've circled below the 22 zone. That's the main target for where we'd like to do exploration. You can also see a number of blue dots parallel to the resource and the historical workings. That's another area that we see as key for our development. So we're at 4 million ounces now. We see a pathway to 5 million just with infill drilling, and then with any luck and some exploration, we can take the deposit to be beyond that. So objectives for us in the near term, we just put that resource out for Eskay Creek in March. Our next step is metallurgy, which we are working on right now. Metallurgy, we're doing feasibility level study metallurgy on the project, so that should be out within the next month. And then after that, we're pushing forward on the PEA, which should be due out in July, August. And we'll be doing infill drilling come the summer, and then we're going to push pretty hard towards a feasibility. We recognize that we've got a pretty spectacular deposit here at 4 million ounces, 4.5 grams open pittable. So we want to push pretty hard in the economics and bring this through to feasibility as soon as we can. So yeah, PEA out in July, August, and then probably an updated resource on Eskay out at the beginning of next year. I haven't had time to talk about our other deposit, Snip. It's another high-grade past producer. Hochschild Mining, a Peruvian mining company, made an equity investment into Skeena last October, and that was before we even had Eskay. So they made an equity investment based on Snip. They have an option that they can trigger where they can come in for 60% of it, so we're going to be doing some more exploratory drilling there. Very quickly, I'm going to touch on the BC Regional Mining Alliance. Skeena is one of the founding members. It's a partnership between industry, the 2 First Nations groups in the Golden Triangle, and the BC government. It's been a wonderful initiative, and the idea is to promote mining investment in the Golden Triangle of BC. It's been very successful. The British Columbia government put $1 million, announced $1 million towards this initiative just in January, so we're very proud of that. And the whole idea is to show that if you're willing to work with your First Nation partners and with the government, you can definitely permit mines and get things done in British Columbia. Quickly, our market cap, we're sitting around $50 million right now, so pretty undervalued considering the 4 million ounces that we have. And I think that's all the time I have. Thank you.